Welcome to the Deep Dive, where we deliver the knowledge that helps you stay ahead. Today, we're cracking open Cloudflare's Q3 2025 results.
Yeah, and it's more than just the numbers this time. There's a huge strategic shift happening.
Exactly. We've got a pretty dense stack of material here, but the bottom line seems to be this. The internet's underlying infrastructure is changing, and Cloudflare is making a really bold play for the future, especially around AI.
That's really the crux of this deep dive, isn't it? This isn't your standard quarterly report. I mean, you look at that 31% year-over-year revenue growth hitting $562.0 million.
Right.
And you realize this acceleration is driven by two big things. First, they're successfully getting into and growing within these massive global companies.
The enterprise push.
Exactly.
Step one.
And second, they're aggressively positioning themselves as like the foundational layer for this whole emerging AI platform.
And that 31% growth, that's the headline you can't ignore. It marks their second consecutive quarter of accelerating revenue growth.
Yeah, acceleration is key.
So our mission today, for you, the listener, is to really understand where the business is healthy, figure out how they manage to win these huge new contracts, and then dive into their, well, pretty ambitious vision for this AI-powered internet, the agentic internet, as they call it.
Okay, so let's start with the basics. The financial foundation.
Right. The momentum is clear, but what about efficiency? Beyond just revenue growth, what really jumps out when you look at the core health indicators?
Well, for me, it's the sheer velocity of their cash generation. I mean, they're healthy, they're growing fast, sure, but they're also getting much more efficient.
Okay.
Their gross margin, it stayed rock solid at 75.3%. That's right in their target zone. But the real proof, I think, is the free cash flow. They generated a strong $75.0 million this quarter.
$75 million, and how does that compare?
Well, that's a huge leap from the $45.3 million in Q3 last year. I mean, when a high-growth company like this can boost free cash flow that much, it tells you they've got serious operational leverage.
Leverage to reinvest, right?
Exactly. Yeah. Reinvest aggressively back into their network, into innovation.
Okay, so that efficiency gives them the runway. But, for the listener, the real story here is how they're growing that top line. They've always been known for that sort of product-led growth, right? Developers signing up small accounts.
Yeah, the classic PLG model.
But they explicitly pivoted. They started chasing the whale, the big enterprises. What's the actual evidence that this enterprise transformation is really paying off?
Oh, the evidence is, it's pretty overwhelming, actually. First, just look at the customer base quantity and quality. The number of what they call large customers, the ones spending over $100,000 a year.
Yeah.
That hit 4,009. That's up 23% year over year.
4,000 is a big number, definitely. But what about the concentration? Are they just signing up more medium fish, or are they really landing the big ones?
No, they are absolutely landing the big ones. The revenue contribution from those large customers, it grew 42% year over year.
Wow, 42%.
Think about that. These top-tier clients, they now account for 73% of total revenue. That's up sharply from 67% just 12 months ago.
Okay, that's a major shift.
All right. That shift is successful enterprise penetration, plain and simple. It shows the platform's broad enough now, strategic enough for CIOs at the biggest companies.
And we're seeing strength under the hood, too. Organizationally, sales productivity was up again, 7th consecutive quarter, year over year.
Yep, the sales revamp seems to be working.
But maybe the single best indicator of how sticky the platform is? That's the dollar-based net retention rate, the DBNRR. That accelerated to 119%.
Ah, yes, the DBNRR acceleration. That's where it gets really interesting. Well, 119% means for every dollar a customer spent last year, they're spending $1.19 this year. So they're not just staying.
They're spending significantly more.
Exactly. They're drastically expanding how much they rely on the platform.
And this is particularly interesting because of those pool of funds contracts they do, right? Can you just simplify what that means for us and why this DBNRR jump suggests those pools are now working for them?
Sure. So pool of funds contracts, they're essentially massive multi-year prepayments. A big company commits a huge budget up front to Cloudflare.
Okay.
And then they draw down from that pool as they use different services, security, networking, workers, whatever.
Got it.
Now, initially, these big upfront commitments, they can actually put a little downward pressure on the retention rate calculation. It looks like less expansion initially.
Ah, okay.
But the fact that DBNRR is accelerating now, up to 119%, shows those big pools of funds are being used up consistently, rapidly.
So the commitment is real. They're actually using the services they prepaid for.
Precisely. It confirms that strategic commitment. Enterprises aren't just locking in a price. They're finding more and more essential ways to use the platform across their global operations.
Hmm. That really shifts the conversation nicely from just the metrics to the real-world impact. Let's look at some of those customer wins you mentioned that showed this move away from single products towards, well, platform adoption.
Yeah, the wins really highlight, I think, three core differentiators for them: vision, cost, and architecture.
Okay, let's start with vision. That AI comeback story you mentioned sounds pretty compelling. They signed a, what was it, 3-year, $22.8 million deal.
Yeah, at a Global 2000 digital media company. And this was a customer they'd actually lost back in 2016.
So how did they win them back after all that
It
time?
was purely AI. The customer basically realized that Cloudflare was the only company building the kind of essential infrastructure needed to protect and manage content for this emerging AI-driven web.
Hmm.
So this win, it wasn't just about basic security or network performance. It actually positioned Cloudflare to potentially become a revenue generator for the customer through something like a pay-per-crawl model.
Wow, okay. So moving from a cost center to a revenue partner, that's a big strategic leap.
Huge. Then the second differentiator is cost and simplicity. And this is where they're really going head-to-head with the hyperscalers. We heard several stories about wins based on fixing massive TCO, total cost of ownership problems.
Right, the TCO angle.
Exactly. Take the rapidly growing media platform, signed a $15 million contract, the main driver, getting rid of those huge egress fees.
Ah, the data moving costs.
Yeah, the penalty you pay just to get your own data out of a big cloud provider. Plus, high latency vendor lock-in, the usual issues. By kicking out the hyperscaler, this customer expects to cut their total cost of ownership by over 30%.
30% is a big number. Are these displacement wins just about Cloudflare undercutting on price temporarily, though? Or is it sustainable?
Well, it seems like it's more than just price. It's also simplicity and architecture.
Hmm.
Look at the Global 2000 European pharma company. They displaced two hyperscale clouds and Accenture point solutions.
Two hyperscalers.
Yeah. And they chose Cloudflare because, and this is a quote, "It's so much easier to build on Cloudflare. When you consolidate security, networking, edge compute onto one platform that's easier to manage, that's a powerful win against complexity."
Simplicity is definitely appealing, but sometimes you just need raw power, right? The third differentiator you mentioned was their architecture, especially in that financial services win for DDoS protection.
Right. That win was all about the core tech. A Fortune 100 financial services firm signed a $4 million deal for Magic Transit and Advanced Magic Firewall. Why?
Why?
Because Cloudflare's fundamental architecture gives them literally 4 times the capacity of all the competing scrubbing center vendors combined.
4 times.
Yeah. When you're a huge bank under constant attack, that kind of capacity and resilience is just non-negotiable.
Okay, so those 3 things, AI vision, TCO, and simplicity, and raw capacity, clearly resonating in the enterprise space. That brings us neatly to section 4, the really visionary part, the future, and it seems it's all about AI.
It really is. Management sees AI not just as another tool, but as the next massive platform shift. Bigger than desktop, bigger than mobile.
It's bigger than mobile, wow.
And crucially, they're predicting that for the first time in, well, a long time, the fundamental business model of the internet is going to change. They're arguing that human eyeball traffic, the currency of the web for decades, probably won't be the main currency going forward.
So what replaces eyeballs?
Agentic commerce. That's the future they're betting on and building for.
Agentic commerce, like AI assistants doing the buying.
Exactly. Think of that old cartoon vision, right? You don't search Google for a cookie recipe.
Yeah.
Your AI agent, your Rosie the robot, just figures out the best recipe, orders the flour and eggs from the cheapest place, optimizes for TCO.
Based purely on function, not branding.
Precisely. Which completely changes how businesses need to think about reaching customers. And it raises huge questions about, what does a brand even mean in that world?
And Cloudflare wants to be right in the middle of this agentic future. They estimate, 80% of the top AI companies already use their network?
Yeah, something like that. They want to be the Babelfish of AI.
The universal translator. What does that mean in practice?
It means they're the neutral ground, the translation layer, ensuring that, say, a query using Anthropic's model can seamlessly talk to a system using Google's or Microsoft's model, all running fast across Cloudflare's global network. They want to help set the standards, the protocols, the guardrails for this whole agent-to-agent internet.
Okay, but powering that needs immense infrastructure, right? especially for AI inference. Yet they keep saying they're not capacity constrained. How is that possible with the GPU crunch everyone talks
It
about?
really comes down to their architecture and optimization. Their network acts like a giant scheduler, as they put it.
A schedule.
Yeah, it dynamically shifts less critical workloads, like free tier traffic, to parts of the network that have spare capacity. But the real competitive edge, they claim, is driving GPU utilization way, way up, aiming for 70–80%, which is closer to CPU efficiency.
Okay, much higher than typical GPU usage for AI.
Exactly. And if they can do that, they can deliver better TCO and better performance than hyperscalers, specifically for those inference tasks. It's all about optimization.
That is a compelling edge if they can maintain it. And speaking of looking ahead, they also made a point about upgrading security to be quantum safe, calling it a solvable problem, not just R&D.
Right, a forward-leaning effort. It shows they're thinking years ahead, understanding that trust and future-proofing the net's security is core to their value.
Absolutely. Okay, finally, let's touch on the leadership change and the road ahead. CJ Desai, the president of product and engineering, is stepping down.
Yeah, leaving to become CEO of another public tech company. Yeah. And Cloudflare management actually framed this as a positive sort of badge of honor, saying it shows Cloudflare is training the leaders of other great technology companies. A bit of spin, maybe, but it reflects confidence. And on the partnership side, they announced a new integration with Oracle OCI.
Making their stuff available on Oracle's cloud.
Right, which underlines their whole multi-cloud is the future stance.
And looking at their own trajectory, they updated their financial targets, still aiming for that $5 billion annualized revenue by late 2028.
But based on this recent acceleration, they now expect to hit a $3 billion annualized run rate in Q4 2026.
That's a significant pull forward from their previous timeline.
It is. Although they are still cautious, management did acknowledge that the whole macroeconomic uncertainty thing could drag on through 2026.
Right, potentially leading to longer sales cycles, maybe more churn risk.
Yeah, those headwinds are still there. But this Q3 acceleration suggests they're finding ways to navigate it, likely by focusing on those big strategic deals that offer immediate, provable DCO benefits.
Okay, so let's synthesize this for the listener. The Q3 acceleration looks robust. It seems fueled by that successful shift to enterprise sales.
Yep, and their proven knack for displacing older systems, even hyperscalers, based on simplicity and cost savings.
And this really aggressive first mover positioning in the foundational infrastructure needed for AI.
So you should now have the key insights into how a really major player in internet infrastructure is not just adapting to, but actively trying to shape the terms of this huge AI platform shift.
And we heard that prediction right, that the whole economy of the internet is moving away from human eyeballs towards this agentic commerce. So given that potentially massive change, here's the provocative thought for you to take away. If AI agents start doing the researching and the buying based purely on function and TCO, how will you identify which businesses, large or small, are going to succeed in leveraging this new agentic internet? And what replaces brand as the mental shortcut for quality and value?
That's the fundamental question Cloudflare seems to be wrestling with and building for. And now it's one for you to think about too.